thrive or they flourish, we can quantify that very quickly.
E-Concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-Concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing E-Concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
But E-Concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-Concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-Concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Monday, August 9th, 2021. I'm Carol Masser. Fresh back from vacation. I feel refreshed, although it also starting to feel a bit like fall as it gets a little bit cooler. My co-host, Tim Stenovic of Bloomberg Quick Take, he is off this week. Coming up, we've got stocks mixed, off their lows, commodities slumping. What's on investors' minds? Well, there's some worries about less stimulus. The stimulus that has been helping out during the pandemic, there's that. And there's also more virus cases as a result of that Delta variant and even a new variant. So we'll get to all of that, plus the Bloomberg Big Take, which is on one of the biggest debacles on Wall Street. So we'll get to that over the next few hours. Let's get you going, though, on this Monday with a check on the trading day. Here is Charlie.
Hi, thank you very much. Big warm welcome back. Carol Masser. Treasury yields edging higher. The dollar strengthening. Right now we've got the 10-year with a yield of 1.31%. Commodities, though, perhaps one of our big market stories today. Crude oil touching the lowest in 3 weeks on concern the Delta virus strain will hamper demand growth. Right now, West Texas Intermediate crude is down 3%, 66.20 a barrel on WTI. Oil stocks, oil company stocks lower across the board as well. ExxonMobil, for example, down 0.9%. BP is down 0.8. Chevron down 1.4%. EOG Resources, as we check a broad range of energy stocks, down 1.8%. Pioneer Natural Resources down now by 2.4%. Dow Jones Industrial Average down 81, drop of 0.2. S&P down 2, little change, down less than 0.1%. Nasdaq is advancing 34, up by 0.2%. 10-year, the yield there 1.31%. Gold is down 1.85%, 17.30 the ounce on gold. Again, recapping, stocks trading mixed with the S&P lower, little change, down 2 now, a drop of 0.1%. I'm Charlie Pellet. That, Carol, is your Bloomberg Business Flash.
Thank you so much, Charlie Pellet. All right, let's get to the Market Drivers Report. And let's set your Business Week agenda on this Monday, August 9th. With us, Dave Wilson, stocks editor at Bloomberg News, here in our Interactive Brokers studio. So, too, is Kriti Gupta. She's Markets Live reporter at Bloomberg News. Dave, let's kick it off with you. You know, I saw a story on the Bloomberg that talked about the S&P 500 already notching 44 records in 2021. A little bit different tone, but that's some perspective for you.
Yeah, and we're going to talk about that next hour with my chart of the day. That's one
like
of
I
the
knew what was
places where you
coming.
would have seen that number. Absolutely. It's the way it's been going. So far, though, it doesn't look like this will be number 45. And it's really some weakness, and it's just sort of scattered as much as anything. Energy stocks, maybe the one notable area, you know, with crude oil pulling back and the shares going along for the ride. That's sort of how things are stacking up at this point. I mean, we've seen financial stocks go from losses to gains as the day has unfolded. You know, there are a lot of company-specific kind of earnings moves, but it's like the broader market's sort of looking for direction. And it's understandable. We're at the point now where 90% of the S&P 500 is reported quarterly results, and we sort of know how things are shaking out. 94% growth in earnings for the second quarter, according to our numbers.
So let's talk about that commodities move, though. Kriti, I know that's something that's on your radar. We've been watching gold specifically, the flash crash. What in particular does the Bloomberg listener need to know about?
Yeah, well, they need to know about the fact of what's going on abroad on the other side of the world. Really have to really talk about China, because there is a read-through here. I mean, overnight, I really like to channel Cameron Christ knew this, but the first thing
everything he writes.
I know, we all do. But you know what? The first thing he does, he goes on to what happened overnight. This is the key piece of it, right? So overnight, you saw Goldman Sachs, JP Morgan downgrade Chinese growth forecasts. And why? It was all because of that variant. And on top of that, the cherry on top of really the perfect storm here is that you also saw this factory inflation gauge surge to yet another record. And why? It really had to do with that commodities inflation that you saw affecting their exports. So not only are they dealing with inflation, they're dealing with slower exports. And Carol, who buys Chinese goods?
We all
Everyone else, right? Everyone in the world. So this is how he brings us right back to here. You see that slowing kind of growth in China, less demand for commodities, but then also slowing global growth around the world. And China has been notable in terms of containing those virus cases. And now they're struggling with it too. So Delta variant, very much part of the story, and you're seeing it show up across assets across the world.
Dave, we just got through, as you mentioned, most of the earnings have been reported at this point. How much did folks who have exposure to the overseas markets really talk about concerns in China? I feel like we didn't hear about it a ton.
Not all that much, perhaps, but then again, I mean, if you think about where we stand with the virus, it's only in the last few days that this has kind of popped up as a renewed issue there specifically. So, I mean, there are a whole lot of other issues people have focused on when it comes to China. Specifically, the government moves against a whole number of companies, whether you think about the ride-hailing service, Didi Global, or the online tutoring companies, or, the food delivery service, Meituan. I mean, there have been a number of examples like that, but that's kind of taken people away from, well, what is the Chinese economy doing here, and how does that get affected potentially by what's going on with the virus? And that seems to be kind of taking center stage a bit again.
Well, I also feel like taking center stage this week, Creedy, is going to be the inflation numbers. And this comes a few weeks ahead of Jackson Hole, where the Fed officials will be getting together. I do feel like it's going to be very tricky, and you see that in the trade today about what we might get from Fed officials that could kind of disrupt trading, maybe make investors just a little bit more nervous.
Yeah, and last week was all about jobs. This week is all about inflation, not just here in the States, but you have inflation metrics, inflation data coming out around the world, in the Eurozone, in South America, in Brazil.
China came in higher than expected.
Exactly, surging to a record, like I said, and they're, of course, exporting it. And Dave just mentioned kind of the regulatory scrutiny that China's dealing with in particular. But think about it, they're actually trying to moderate their growth. They're they're saying we're going too fast. We got to slow down. So for them,
some would say that's responsible.
Right, exactly. They're doing what's best for their country. But for us, it's like, wait, hold on a second. You're driving the global growth story. You can't do that. So this is going to be kind of this push and pull. On the one hand, you have the two sides of the Fed mandate. What's going on with the labor market recovery? Do you listen to the Fed and trade on that? Or does the market kind of say, well, we know better, and you pay attention to those inflation numbers, to the commodity story? And that's kind of what is happening at the moment. But then you also, like I said, have this global growth story that may or may not be completely turned on its head by the Delta variant. And now I believe there's another one, Lambda, I think.
Exactly. And I know the doctors that have come on our air have said, listen, we're going to go through the whole Greek alphabet. And the concern is, when you talk to the medical professionals, is that you get something that is highly, highly contagious and also highly, highly deadly. And that we know that the Delta variant is a lot more contagious, but it's the other part of the equation that makes us a little nervous. Dave, what's on your radar for the rest of the week here?
Well, I mean, we get a few assorted kinds of numbers from companies.
AMC is after the, I just want to point out earnings after the close.
Well-known game stock, absolutely. Walt Disney is another one that stands out. But I just wanted to touch on what you were talking about with the virus, because if you look at what's going on today, best performer in the S&P 500 is Moderna.
I saw that.
Up 16%.
Another record for this company.
Yeah, absolutely. And we got results out of Germany's BioNTech, which is partnered with Pfizer on, again, COVID-19 vaccine. They raised their projection by about 28% in terms of this year's sales. They're looking at, memory serves, more than $18 billion, or the equivalent of that in euros. And BioNTech's up 14% in U.S. trading. So, as much as the virus is an issue for a whole lot of companies, and you're seeing it with what's down the S&P 500, airlines, cruise lines, and a bunch of others, it's a plus for these vaccine makers, for sure.
Exactly. All right, guys, thank you so much. Perfect setup on this Monday. Dave Wilson, stocks editor at Bloomberg News. He'll be back with his chart of the day. Kriti Gupta, always check her out here on Bloomberg as well as on Quick Take. She's Markets Live reporter at Bloomberg News. Let's do the Business Week Bite of the Day, one number that tells us a lot. Today's number, 1994. The QR code, or quick response code, was created back in 1994. It was invented by a Japanese subsidiary of Toyota that needed a more accurate way to track vehicles and parts during the manufacturing process. Today, companies use them to point consumers to their apps, track packages, and even more so during the pandemic. We take them for granted as we bring up our favorite restaurant menus on our phones. Like, we use those QR codes all the time. All right, lots to come over the next couple of hours. We'll get a check on real estate, specifically with the co-founder of Romer DeBoss. We'll also talk about the debt ceiling farce. That's a headache investors could do without. Yeah, definitely about that. We're also going to get the Bloomberg Big Take today about one of the biggest debacles in Wall Street history, so stick around for that. In the meantime, let's get a check on world and national news. Nancy Lyons in D.C. Hey, Nance.
Hey there, Carol. Well, the details are now out regarding the budget resolution offered by Senate Democrats that sets up President Biden's $3.5 trillion economic agenda. It allows Democrats to bypass Republicans to expand the social safety net and raise taxes on the wealthy and corporations. Bloomberg's Anne-Marie Hordern says it's expected to be voted on this week. But first, lawmakers will take a vote on the bipartisan infrastructure plan, expected later today or tomorrow. She notes there has been progress on an amendment regarding cryptocurrency reporting.
It looks like you do have this bipartisan approval for this new legislation, this amendment to the legislation. The question would be whether or not you can actually get it to a floor for a vote, because you actually need 100 senators even to vote on wanting to vote on this amendment.
Hordern says the amendment provides clarity about who are the actual brokers of a cryptocurrency. The future of the budget resolution needs the support of all Senate Democrats, and West Virginia Senator Joe Manchin has said he will not support a final budget package that adds to the deficit. A UN report on the climate is being called a code red for humanity. The chair of the report, Ho Sung Lee, says Earth is getting so hot, temperatures in about a decade will probably blow past a level of warming that world leaders have sought to prevent.
It is indisputable that human activities are causing climate change and making extreme weather events more frequent and severe.
Lee says greenhouse gas levels in the atmosphere are already high enough to guarantee climate disruption for decades, if not centuries, to come. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Masser, my co-host Tim Stenovic off this week. Charlie Pellet of Bloomberg News joining me right now. And Charlie, as always, every day, but I always feel like in particular on a Monday, there's a ton of headlines when it comes to COVID and the vaccine. A couple that caught our attention, I think we all kind of caught it when it was what we call a red hot sticky on the Bloomberg in the newsroom. It was the Pentagon requiring members of the U.S. military to get the COVID-19 vaccine by September 15th. This was coming from the Associated Press. They apparently got a memo, and so the defense chief, Austin, open to mandating COVID-19 vaccines, but nonetheless, the Pentagon definitely weighing in on this.
It certainly is. It sends a powerful message to employers everywhere, to people all over America. The reason troops often live and work closely together in barracks or on ships, increasing the risks of rapid spreading, and any large outbreak of the virus in the military could affect America's ability to defend itself in any national security crisis. So the Pentagon says, get those shots.
Yeah, exactly. Especially as we know that we continue to see COVID-19 mutating. And there were a lot of stories over the weekend about now the Lambda variant. We have certainly talked with medical professionals from Johns Hopkins and elsewhere who are talking about that we will go through that Greek alphabet, that we will continue to see as long as there are people who aren't vaccinated and the virus can find a host, we'll continue to see mutations. In the meantime, we are beginning to think about boosters. We heard from Anthony Fauci, Dr. Anthony Fauci, talking about those who are certainly concerned, maybe have immunity deficiencies, that maybe they need to be prioritized in terms of getting the next booster shot.
Indeed. And while we're talking about all of this, Carol, we cannot ignore what's happening to shares of BioNTech today. That's Pfizer's German partner. It was a stock that Dave Wilson was just talking about. But look at shares of BioNTech today, surging by 15.4% today. Moderna shares, they're rallying as well, based in Cambridge, up right now by 17.6%.
Right, top in the S&P 500 and the NASDAQ 100 as well. We're going to talk a little bit more, too, about messenger RNA and COVID in just a moment.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to trade mixed. S&P little change right now, down by 1 point. Commodities are slumping. Bitcoin is surging. Investors, though, weighing concerns about a pullback in stimulus and a resurgence in the fast-spreading Delta virus variant. Bitcoin up now by 4.75%. S&P down less than 0.1%. The Dow down 63, a drop of 0.2%. The Nasdaq Composite Index up 31, up 0.3%. Nasdaq 100 Index up by 0.2%. 10 years down 6/32. 10-year yield 1.31%. Gold down 1.9%. 17.30 the ounce, down $32 the ounce right now. West Texas Intermediate crude down 3.1%, 66.15 a barrel. Lots of movement today in travel-related stocks. The airlines all lower. UAL down 2.1%. American down 2%. Delta down 2.1%. Southwest down 1.4%. Cruise line stocks are slumping today. NCLH, Norwegian Cruise Line Holdings, down 1%. Royal Caribbean down 1.5%. Carnival Corp down 1.7%. And that's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So we mentioned some of the COVID headlines, and our news team has certainly been covering them. And among the COVID headlines, also new coronavirus cases in the U.S. surging to the highest weekly level since early February, fueled by that highly transmissible Delta variant. Charlie was just talking about it. Deaths rose by 49%. That's the biggest weekly increase since December. And China is punishing dozens of local officials for failing to curb that COVID-19 outbreak in that country. And so the country's former health chief there saying the idea of, quote, living with the virus is unacceptable. We've got a great voice to bring in. He is back with us, Dr. Jacob Beecraft. He's a biologist. He is CEO and co-founder of the privately held biopharmaceutical company Strand Therapeutics. He joins us on the phone from Boston, Massachusetts. Dr. Beecraft, good to have you back here on Bloomberg Radio. How are you?
I'm fantastic, Carol. How are you doing?
Doing well, trying to manage through and filter through some of the headlines. The current round of virus headlines, cases surging, especially for those not vaccinated. What needs to be top of mind for our audience and the general public, in your view?
I think two things. One is domestically, we need to make sure that we're getting vaccines out as quickly as we possibly can. I think now finally the Biden administration is also taking the correct step, pressuring the FDA to prioritize the full review and approval of the COVID vaccine. And internationally, we need to be getting vaccines out to the developing nations. The Delta variant was first picked up in India during their major outbreak recently, a month ago, and that likely led to a huge international spread of it, which is now threatening, kind of the return to normalcy that we saw. Right now, the Wellcome Trust is reporting that 1 in 2 people in wealthy nations is vaccinated, but only 1 in 74 are vaccinated in the developing world. And in the developing world, where sanitation is often, not as well, and people are living in much tighter quarters in a lot of these areas, major cities and places like India, it further increases our risk of spread. And so it's just unacceptable that we still haven't been able to get these vaccines out into these developing areas, because every single day that goes by, we risk a fully vaccine sort of resistant virus emerging either here or abroad.
How tricky do you think it becomes, especially as people start to talk about, including Dr. Fauci, about giving out boosters already? And how do we balance the developing world, where some of them haven't even gotten their first vaccine, individuals there, and now we're talking about boosters potentially for those in the developed world?
Right now, we have a bigger problem than just the boosters. We have a problem of not enough people getting vaccinated in the United States, which honestly, while I respect everyone's right to choose themselves, when you live in a society, there's a certain amount of societal duty and let's face it, patriotism that you should have to protect those Americans around you. This outbreak of the new variant is due to super spreader events happening, mostly driven by the unvaccinated population. Of course, now we're seeing them jump into the vaccinated population, and it's very sad to see. But meanwhile, I think it was the state of Alabama I saw recently had 74,000 vaccines expire while they held them, as people did not take them. And so the idea here, and it's been the entire time, is that we have enough vaccines here stateside. We should probably be doing more to get vaccines out to the developing world the massive manufacturing of these vaccines. I think that at this point, it's more of a logistical and a prioritization issue of getting vaccines where they're most needed than it is of just not simply having enough. I mean, if you're going to say there's not enough for the developing world, but then Alabama's going to let 74,000 vaccines expire in a freezer, I think that that's also unacceptable.
Yeah, it feels like a crime, many would argue. What are you doing for your own employees? There's increasingly, we're seeing employers and other institutions saying, if you want to work with us, you've got to be vaccinated.
We looked at and talked with a lot of other executives in the industry about this. I think we're very blessed, both as a biotech company and as a messenger RNA company, to have, without any prompting from us, 100% vaccine adherence. I think that people, when they are educated about the science and understand how safe and effective and impactful these vaccines are, it wasn't something that really came up as a general issue. I think that it's nice, actually, to see that some of the larger players, I saw the military recently, saying that they're going to be starting to mandate the vaccines. I mean, I think that a lot of these employers should really incentivize their employees to get these vaccines, especially people that work at tech and biotech companies. It's clearly what's going to save us from a vaccine-resistant mutation. And while I think mRNA is an absolutely miracle of a platform in terms of how quickly it could be repurposed, Stefan Dancel and Ugur Sahin from Moderna and BioNTech have talked at length about making new vaccines against the new variants to be more effective against new sort of mutations that may arise. But the fact of the matter is we have an effective vaccine that we just need to get into people's arms immediately, and it should be on employers. Really, I'd like to see the U.S. government really step up and start to mandate if people really want to return to a maskless life, we have to have a way to actually verify that people have been vaccinated.
Sit tight for a second, because I want to come back and I want to talk specifically about the work you guys are doing, because I know you're using synthetic biology specifically to do RNA therapeutics. So I know we've talked with you before, but I want to get a little bit deeper into it, because it sounds like increasingly we hear about the potential for this science and what it might hold in the future. We're going to come back with the co-founder of Strand Therapeutics.
Hello traders, how are you doing today? I'm going to place an order to sell short euro. So if you're looking to sell euro, here is your chance, 1.17444. Okay, I'm going to place order. By the way, today will be we're going on holiday for 1 week, and we will do maintenance. So this is last day, and next time I will speak to you next week on Tuesday. Okay, so but on the meantime, I'm going to place an order to sell short euro at 1.1744, and it looks like position opened. So all of you guys who managed to open position, well done. And stay with me. This is short position. So overnight, if you will hold overnight this position, broker pays you money. If you hold, if you know our strategy, you know what to do. If you don't know yet the strategy, you can purchase it from company.co.uk, and you can get the strategy and you can use it to trade other pairs. Otherwise, I'll speak to you later. Bye-bye. Okay, guys, as you can see, I have to place stop on profit for euro. Okay, and I'm going to place at 117.42.4. Let's see. 42.4. Stop on profit placed. I'll speak to you later, guys.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. We move into the final hour of trading on this work Monday, August 9th. Stocks trading mix. The S&P lower, little change right now. The Dow remains lower. NASDAQ is higher. Right to the numbers. We'll give you the why in a moment here. With the S&P down 1 point, little change. The Dow down 72, down 0.2. NASDAQ up 39, higher by 0.3% so far this year. S&P holding on to a gain of 18%. 10-year's down 5/30 seconds. 10-year yield now 1.31%. Stocks mix. Commodities slumped. Bitcoin higher. Investors are weighing concerns about a pullback in stimulus and a resurgence in the fast-spreading Delta virus variant. Bitcoin up now by 5.3%, 46,176 on Bitcoin. Gold is down 1.9%, $17.29 the ounce. West Texas Intermediate crude down 2.3%, $66.72 a barrel. Wednesday, we'll be getting new numbers on consumer prices amid questions about the inflation outlook. Economists say consumer prices probably rose in July at the slowest pace in 5 months, marking a deceleration. Claudia Som is senior fellow at the Jane Family Institute.
We know that the factors, if you look under the hood, the factors of this extraordinary jump in prices, like I don't want to underscore the pain that this caused, but these are not things that are staying with us. I mean, just the used motor vehicles, like those prices are coming back down, right? We should not change course and abandon the millions of workers who are not back to work just because we're going to have 6 months of prices that moved up faster than we expected.
Travel stocks, they are trading lower right now. Among some of the names declining, cruise lines in particular. Right now we have got Norwegian down 0.5%. Royal Caribbean, RCL on the ticker there, down 1.1%. Carnival Corp down by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week on Bloomberg Radio. I'm Carol Masser. Tim Stenovic is off. Bloomberg Business Week brought to you by SEI. Today's competitive marketplace requires asset managers to become more operationally adept. See how you can transform your business with SEI's global platform at SEIC.com/IMS. Well, it's been chronic, the flow of headlines out of China, in particular crackdowns on the country's big tech companies and more. But what's really going on here? Well, let's find out. And he writes about it in his weekly column. Bloomberg New Economy editorial director Andy Brown, he notes that there is something much bigger going on. He joins us in our Bloomberg Interactive Broker studio. So you and I have talked a lot about the headlines, and I feel like they are fast and furious, nonstop. Very thoughtful column, and you look at it in a different way. What do you see is really going on here?
So the question everybody wants the answer to is why on earth are Chinese authorities going after the most dynamic, the most profitable part of their economy, which of course is the tech sector and particularly consumer tech? A crackdown, by the way, that has cost listed Chinese companies in excess of $1 trillion. And I happen to think that the most popular explanation for this is also the most unlikely. And the explanation everybody is coming up with is this is sort of benign. This is President Xi Jinping looking at rising prices in China and saying this is exacerbating inequality and we have to do something about it. And that involves cracking down on tech companies who are allegedly building monopolies and underpaying their gig workers and abusing consumer data and so on and so forth. I happen to think this is a fig leaf, that actually this is all about a monumental struggle for power and control in China. And the giveaway here is the fact that the sharp end of this crackdown, and you're seeing it now, particularly last week, is led by ideologues in the party and including in the propaganda agencies, which really are core to power in China.
Well, right. And that, I mean, if you think about impacting people, right, in terms of how they're thinking about it. So you're basically saying, Andy, the Chinese government's a little bit worried about losing its power of controlling its people. Is that it?
I think they look, it's certainly not the full story, but it's a much more likely explanation than going after tech moguls because that's their pathway for reducing inequality. If that really was what they had in mind, they would be doing something about public policy, because it's public policy that shapes education,
right,
shapes healthcare, shapes housing markets, which are the three biggest drivers of inequality in China today.
Right. And what's interesting is you talk about, I mean, the government controls so many of these different markets, right?
Right.
Already. So it's like, well, wait.
Right. Well, so they closed down the entire $100 billion ed tech sector, right?
Right.
Okay. Then you ask yourself, how did this sector come into being? Well, it's a market response to a brutally competitive education system, which, by the way, in rural areas of China is chronically underfunded.
Right.
Parents will pay anything to get their kids through examinations, particularly the Gaokao examination that gets you into good colleges, and it is the pathway to social mobility in China. That's why you have an ed. Now, if you want to fix your problem, you do something about the structure of education.
Right.
And it's a similar story in healthcare, the same story in housing.
Because if you control it or shut it down, it just becomes even more inaccessible, right?
Right. Well, that's the crazy thing. Now, if you're not going to be able to go online, you're basically forcing poorer middle-class families to accept one-on-one home tutoring. Right?
Andy, we have these conversations often with you and just generally because it's been impacting also financial markets. I mean, where does it go? How do you see it playing out? You understand, obviously, having spent time there, kind of how they think and how they approach things. So where does this go? How do you think this ultimately plays out?
I think this is by no means the end of the story. I think we're at the beginning of an almighty struggle for power and control in China. And this is Xi Jinping and the party saying, we've identified the one part, the one class of people in China that can rival us, the party in influence. They have the wealth, they have the social standing, and they have the strategic resources, big data. And the party is saying, we want that. We want to claw back control and power.
What could big tech ultimately, if they have their way and they're able to kind of keep running with it, how could that really change the power structure? I mean, I understand how it can influence thought, right? But I mean, in terms of actually changing the Chinese government, could it?
No,
Okay.
you're not. No, I mean nobody is talking about overthrowing. But the question, from Xi Jinping's point of view, is we're about to go into. We are now in a period of extreme competition with the United States. Essentially, they've decided that the U.S. wants to contain China, wants to stop it rise, wants to take it down. They want the data. They need power. They need to consolidate their control. They want to have a top-down economy. They believe, actually, that big data will be able to guide a high-tech authoritarian regime, and it'll be much, much more successful than the U.S. model.
So I know I always bring it back to you for this, and forgive my ignorance in terms of kind of understanding, but I do think about investors, because I don't feel like, I know Kathy Wood and ARK, they've kind of pulled back a little bit, but not every investor has. Just got about 30 seconds left here. Do investors need to be increasingly nervous?
They do need to be increasingly nervous because there is no way of divining where this thing is going to play out. Once it enters the realm of ideology and politics, there is no model that can predict where this is going, no matter what Chinese regulators say.
All right, going to leave it on that. I know you sent us a lot more stories, so we'll have to get to them next time, so I apologize. But I'm glad that we were able to dig into this. Andy, thank you. Appreciate it. Andy Brown, he's editorial director at Bloomberg New Economy in our Interactive Brokers studio. All right, coming up next, folks, we're going to check on one of our Bloomberg Big Take stories. It's also among the most read, if not the most read story on the Bloomberg. We'll get to that in just a moment. In the meantime, off to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the Senate is inching closer to final passage of the big infrastructure bill. The bipartisan measure covers roughly $1 trillion in spending for long overdue infrastructure upgrades. As a vote nears, lawmakers have addressed a sticking point concerning cryptocurrency and who would be required to report transactions. Republican Senator Pat Toomey says they've offered an amendment.
Our solution makes clear that a broker means only those persons who conduct transactions on exchanges where consumers buy, sell, and trade digital assets. It ensures that the bill does not sweep in software developers, crypto transaction validators, node operators, or other non-brokers.
Toomey says this new amendment has been approved by Treasury. A vote is expected late today or tomorrow. Then if it passes, it'll move on over to the House. A committee of the New York State Assembly has been learning more about an attorney general's investigation into sexual harassment allegations against Governor Andrew Cuomo. Judiciary Committee Chair Charles Levine explains their next steps.
We expect to hold public hearings to present testimony from independent experts on key subject matters related to the impeachment inquiry.
Levine says Cuomo will be treated fairly. The governor has denied the allegations. The Assembly Speaker, Carl Heastie, says members have no confidence in the governor to remain in office. Jury selection is underway today in R. Kelly's sex abuse trial in New York. The Grammy-winning singer faces multiple charges, including sex trafficking of women and girls. Kelly says he is innocent of the charges. His attorney says the alleged victims were groupies who wanted to be with him. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Joining me once again is Charlie Pellet of Bloomberg News. There is a flurry of stories about Wall Street, certainly on the Bloomberg, Charlie. One of them includes Jefferies matching Goldman, Jefferies Financial we're talking about, boosting the salaries of its first-tier analysts in the U.S. by more than a quarter. It's the latest bank to bump pay as they seek to stem defections amid intense workloads. I mean, there is a lot of competition for these workers going on Wall Street, and it feels like each Wall Street firm keeps matching the other.
Indeed. There's so many directions we can go with this, Carol Massar. We can go macro, we can go micro. You want to talk about wage inflation here. You want to talk about how this is like a Rubik's Cube for all these firms on Wall Street, where when one firm raises, like a poker game, do you have to raise or see you won there? I also want to talk about what's happening off Wall Street, because you mentioned Jefferies Financial Group, JP Morgan Chase raising the stakes as it expands a previously announced pay increase to a broader range of staff. But not sure if you saw this story on the Bloomberg this morning by our Jordan Hallman, Leslie Patton, and Peyton Forte. Talked about wages going up at a number of other firms, not on Wall Street, but Kroger, Chipotle Mexican Grill, Under Armour. The headline on the Bloomberg here, corporate America ponying up for workers suddenly in demand.
Yeah, exactly. Workers scoring the fattest pay hike since the early 1980s. Wages for the leisure and hospitality industry surging at an annualized pace of 6.6% over the past 2 years. And of course, we got the Friday payrolls data, which showed that payrolls rose nationally at the fastest pace in almost a year. So we know employers are desperate to fill jobs. We know everybody's seeking workers, and I think for Wall Street, where, holding on to bankers, training them, keeping them there can lead to lucrative relationships that pay off ultimately for the top and bottom lines at these Wall Street firms, Charlie, and that's why you see some of this competition happening.
And just let me throw out one additional macro thought on all of this, Carol. Maybe they'll cover it on Sound On tonight, who knows. But what about the political implications of all of this? Wage inflation, yes, but on the other hand, workers making more money, that's got to be good for re-election.
Yeah, exactly. All right, Charlie, thank you so much. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, S&P meandering right around the unchanged mark. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed right now, with the Dow currently down 78 points. Like you said, S&P is a little changed right here, and NASDAQ is trading higher by 39. The U.S. 10-year yield at 1.32%. Gold is down 33. Transports fall 117, while Bitcoin is higher by 5%. Among the main 11 S&P sectors, financials led. Energy was under pressure. And leaders to the upside in the Dow, Goldman Sachs and Walgreens, while Chevron and Amgen led to the downside. In deal news, DraftKings to buy Golden Nuggets Online Gaming in an all-stock deal, and Cargill, as well as Continental Grain, is buying Sanderson Farms for $203 per share. In other news, Moderna soared as much as 19% to a record high. And wrapping things up, AMC and Planet Fitness both report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These plans are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
All right, well, the Bloomberg Big Take happens to be also the most read story on the Bloomberg today. It's about the little-known hedge fund and its manager that blew up to the tune of $20 billion, making both the fund and the individual behind it household names just a few months ago. Let's get more on this story. Bloomberg hedge fund reporter Kathy Burton, she's with us in our Interactive Brokers studio in New York. There was a period where, like, every day, this is what we talked about. We're talking about Archegos, right? So remind our audience in case they forgot, because it really was this individual and fund that we never talked about, really.
Well, yes. The thing is that it's actually a family office for a guy named Bill Huang, who used to be a hedge fund manager.
Right.
He got into a little bit of legal issues with the SEC, and then he turned into a family office several years ago.
That's right. I forgot. He went through a couple of iterations. So remind us, though, that, then it blew up, right, to the tune of $20 billion.
Spectacularly. Yes. No one realized that he had amassed an amazing fortune of more than $20 billion. And then in 2 days, it disappeared.
And we're still trying to, you and I were talking before we got going, there's still so many questions out there about kind of what happened.
Yes, exactly. There was a big report that came out from Credit Suisse several days ago. And in that report, they said that Archegos, the family office, likely lied to the bank. But they provided no other details of exactly what that means. And they did say that they were going to go after Archegos to try and get some money back.
Well, and to be fair, there are obviously a lot of litigation going on at this point. Right?
Not yet, but we expect that, yes, there will be.
I mean, what's interesting, listen, Kathy, you follow Wall Street, the financial community, the hedge fund industry. I mean, we want to kind of know what happened, right? Because this is one of those stories that we think there's a fair amount of transparency, right, in the financial markets. And then all of a sudden something like this blows up and you're reminded that, wait a minute, something can happen to the tune of $20 billion kind of from nowhere.
Yes, and in that Credit Suisse report, which people can see, there are many examples in which the bank actually said, Archegos sort of told us that they had similar positions at other banks. And then it's really hard to imagine that they were allowed to build up a portfolio that was worth about $120 billion, including leverage.
Which is pretty remarkable. Okay, So, and transparency maybe would have helped prevent that from happening. What's great about this story is, as I said to you, there was a period where we were talking about this constantly as it unwound in the financial markets and just kind of getting a grasp of who this individual was. He's still around.
He's still around. He's in New Jersey.
It's where he lives, right?
That's
and where he lived before.
And where he lived before. And he's just trying to work through this big fiasco that's happened to him. And the SEC is looking into it. The DOJ is looking into it. He has employees who are angry at him because they lost all their deferred comp when the firm blew up.
Right.
And he has some employees that are hoping to start their own hedge funds.
And is he supportive of that?
As far as we can tell, he is, although we don't know if that support extends to giving them money or not.
And that's, I guess, one of the questions. As you said, there's still a lot of questions out there. I mean, he, lives in an expensive place in New Jersey, right? I mean, he's not somebody, though, that was really flashy, right?
No, not at all. I mean, the house is nice, but it's not Steve Cohen nice or Ray Dalio nice. It's just a nice house.
Right, exactly. And we don't still know what money he's got left, right, personally?
No. His employees speculate that he is still a billionaire.
Mm-hmm.
But because we're told that he has investments outside of Archegos. He was, for example, an early investor in Cathie Wood's ETFs, although we don't know if he still has that or not. We also know that in the final week, he took about $2 billion in excess margin from Credit Suisse.
Mm-hmm.
But we don't know what happened to that money. We don't know if he put it someplace else or if he used it to pay off margin calls from other banks. We don't know.
Just got about 45 seconds left here, Kathy. And I do highly recommend, as I said, it's a most read story, the most read on the Bloomberg. In doing this and kind of doing this update on kind of, where he is, how he's doing, what's your big takeaway right now on either him and just kind of where this story sits right now?
Mostly that there's just a lot more to come. We'll probably see some sort of suit or something from Credit Suisse in which we'll be able to get more information, maybe from the other banks too, we don't know. And it's just really an ongoing tale, and it's going to be interesting to see if he's still tries to come out and have a new family office, for example.
Right. I mean, we've seen people, right, decimate and come back. And it's just a reminder that this is evolving and more to come out. It's a must read. I'll put it out on Twitter. There's so much great detail in it. Kathy, thank you so much. Really appreciate it. Kathy Burton, hedge fund reporter at Bloomberg News in our interactive broker studio. As I said, it is the Bloomberg Big Take on this Monday.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So it's that time of the day when we check in with Dave Wilson. Chart of the day is what we're going to get. I gave a little teaser to it without even really knowing it. So stick around and we'll talk about the S&P 500 in just a moment. Also get his song of the day. First up, though, back to trading and your top business stories. And Charlie Pellet, 29 minutes to go.
Indeed. And so many songs feature the words S&P 500. Got to see what Dave Wilson comes up with in just a moment.
No,
here.
they don't.
I'm just kidding. But he always manages to tie it together so nicely. Here's what's going on. We have got stocks trading mix, commodities slumping as investors weigh concerns about a pullback in stimulus and a resurgence in the fast-growing Delta virus variant. S&P 500 and the Dow both dropping from a record. Right to your numbers with the S&P lower, little change right now. Briefly was trading higher, but right now the S&P's down 1 point, down less than 0.1%. The Dow down 82, lower by 0.2%. NASDAQ higher by 37, a gain there of 0.3%. NASDAQ 100 index up 0.2%. Among some of the other indexes and averages, Russell 2000 down 0.3%. Dow Transport's down by 0.8%. 10-year's down 5/30 seconds. 10-year yield 1.31%. Gold, commodities in general being hit hard today. Gold down 1.9%, 17.28 the ounce. West Texas Intermediate crude down 2.1%, 66.82 a barrel. New coronavirus cases in the U.S. have surged to the highest weekly level since early February, fueled by the highly transmissible Delta variant. Deaths up by 49%, the biggest weekly increase since December. Back to school right around the corner and the resumption of in-person learning amid rising COVID cases in many parts of the country. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health. Earlier today on Bloomberg Television and Radio, he told us with appropriate precautions, it is absolutely critical to get those kids back in classes to prevent other health issues.
And there are many. It's not just anxiety and depression, although that's a huge one. It's not enough food to eat. It's the potential poor recognition and mistreatment because so many kids are recognized as being abused in school. There are so many reasons for kids to go back to school, but we have to do it safely. And frankly, the school boards, the principals who are not standing up for the health of kids are really doing a disservice, and they may come to regret it seriously.
And Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track of some of the vaccine stocks, we've got Pfizer up 1.8%. Big day for ADRs of BioNTech, surging 15.6%. AstraZeneca's ADRs down 0.5%. Moderna, based in Cambridge, Massachusetts, up 17.2%. J&J up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much for that update. You are listening to Bloomberg Business Week. Carol Masser in our Interactive Broker Studio, and this is Bloomberg. Sounds like you're talking about the S&P 500. There is a song about the S&P 500.
Yeah, you could say that. I mean, given how things have been going this year, Friday was actually the 150th trading day of 2021 here in the U.S.
Right.
And the S&P 500 set its 44th record of the year. So to put it another way, we've seen the index reach a new high every 3 to 4 days. And at that rate, you would be challenging the most highs ever in a year. You know, you just do the math and just sort of assume that the pace we've seen already in the first 150 days keeps up through the next 100 days, which is how much we have left in the year, and you end up with 74 records. The most ever, according to the folks at LPL Financial, was in 1995 when the S&P 500 set records 77 times.
It's a lot.
It is a lot. It just goes to show you what kind of year it's been for stocks. And bear in mind, too, we talk about market corrections being losses of 10% or more. You haven't had any of those. In fact, you haven't even had a 5% drop in the S&P 500 since November.
So not at all.
Not at all.
Okay.
And so it's just a slow and steady march higher and record after record along the way.
Some of it makes sense, right? Because we fell off a cliff, and then as stimulus programs and then a recovery, at least we saw that things could be better, at least that there was some kind of floor put in under the dropout. But it still is kind of perplexing, right, Dave, considering the questions that are still out there. We're not out of the pandemic yet. We have conversations about peak growth, despite earnings estimates seem to keep going up for the S&P 500. So there's it's kind of a strange environment.
It is. I mean, it's almost like people kind of fall back to what they're used to. And what they're used to is seeing stocks move higher going back to March of last year when, we had that very brief bear market bottom out.
How much of it do you think is, you hear Gina Martin Adams talk about this, Tina, there is no alternative, especially at a point where we're seeing questions about Chinese growth, the other economic engine for global growth, that when it comes to things, the U.S. seems to have been on more of a sure footing than maybe lots of other parts of the world.
Yeah, and that may well be part of the mix. I mean, the U.S. has consistently performed better than the rest of the world for years. I'm just struck by one thing, though. If you look at the S&P 500, the dividend yield at the moment, 1.32%.
So what is that historically?
You know what the yield on the 10-year Treasury is?
Below that?
1.32%. It just goes to show you, bond yields having been down, people willing to pay up for stocks, even if that means lower payouts down the line. Anyway, if you want to see this chart, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Love charts like this. They're so straightforward. Stock of the day, straightforward?
Yeah, pretty much. It's a company called Veritiv. The ticker is VRTV. It's in packaging and printing, so it's working with a lot of businesses. We got their second quarter results. Earnings per share, more than double the average analyst estimate in the Bloomberg survey. Sales came out ahead by 9%, the most since the company was put together in 2014. Oh, and they raised their estimates for some other gauges. Adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, also a cash flow gauge. Just what people wanted to see. Veritiv shares at a record and up almost 19%.
Almost a $1.2 billion market cap, up 270% this year.
Yeah.
On quite a run. Great stuff, as always. Dave Wilson, thank you so much. His chart of the day and his stock of the day, definitely check that out at 4:15 p.m. Wall Street time. All right, off to World and National News and Nancy Lyons. Hey, Nance.
Hey, Carol, senators are still working out some final issues before taking a vote on the $1 trillion infrastructure bill. Senate Majority Leader Chuck Schumer is sounding hopeful about the bipartisan effort to address the nation's roads and bridges, as well as that Democratic effort to fund social programs.
The bipartisan bill we'll vote on tomorrow, as well as the budget reconciliation bill that will allow Democrats to make historic investments in American jobs, American families, and efforts to reverse climate change.
Schumer says the infrastructure bill is the first time in decades the Senate has come together on big legislation. The Pentagon is out with new guidance on vaccines for the military and says the shots will be mandatory for all service members by September 15th. That deadline could be pushed up, though, if the vaccine receives final FDA approval. The world's top climate scientists are warning the planet is warming faster than expected, and it's time to end the use of fossil fuels. They report greenhouse gas levels in the atmosphere are already high enough to guarantee climate disruption for decades, if not centuries to come. One of the authors of the UN report, Federico Otto, says the average global temperature will likely cross the 1.5 degrees Celsius warming threshold within the next 20 years.
If we stop warming at 1.5 degrees, then we will also stop many of these extremes from getting worse.
Otto says some of the impacts of global warming are already irreversible. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Massar joining me once again. Charlie Pellet of Bloomberg News. Charlie, we had some headlines cross, and we've been tracking this today here at Bloomberg. It has to do with more concerns about sunscreen.
Indeed, and researchers asking regulators to pull some sunscreens from the market, including brands such as Coppertone, Banana Boat, and Neutrogena, saying they have found evidence of a potential carcinogen. A trade group, must stress, calls the report misleading.
Yeah, well, you know, and this is the kind of second recall, right? Or at least pulling some sunscreens from the market. Scientists petitioning the FDA to remove from sale all sunscreens containing the active ingredient octocrylene. Products made with the chemical may contain benzophenone, which is a suspected carcinogen, as Charlie mentioned, that also can interfere with key hormones and reproductive organs, according to a group led by Craig Downs. He is executive director of the nonprofit. It looks at risks to health and the environment specifically. And as you said, though, a trade group for the sunscreen industry and for those that make sunscreen said it's misleading.
Indeed, and you got Downs saying, quote, the FDA does not know what the safety is here. It's unconscionable that the FDA would allow something that we don't know if it is safe or not. As somebody who is very sensitive to the sun, I use a lot of sunscreen. I love the beach, and this is a story that I'm following very closely for personal reasons.
Yeah, right. And no, exactly. All of us, right? We all use it and assume that there is safety in the product. So we know concerns about sunscreens, at least according to our reporting, and reminding that this all began heating up back in 2019. That's when the FDA asked manufacturers for safety data on chemical ingredients, including octocrylene. Then you might recall in May, an independent testing lab found levels of another probable carcinogen, benzene, in several products, and that, Charlie, led to some recalls. Listen, this gets into transparency. What's in products? What do we know? And the more we know, especially when it comes to chemicals, you know, we need to know and what the possible implications can be. All right, you're listening to Bloomberg Business Week. Check out more at Bloomberg.com. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We've got stocks moving lower right now with the S&P down 4 points, retreating from a record, down by about 0.1%. The Dow down 106 now, down 0.3. NASDAQ holding on to a gain, up 28, higher by 0.2%. Stocks trading mixed. Commodities are slumping as investors weigh concerns about a pullback in stimulus and a resurgence in the fast-spreading Delta virus variant. S&P and the Dow both lower. Energy and real estate sectors down the most. Moderna, though, leading the NASDAQ Composite Index higher. Moderna shares surging now by 17%. NASDAQ up 28, a gain of 0.2%. S&P down 0.1. Again, the Dow lower by 0.3%. 10 years down 6/32. 10-year yield 1.31%. Gold down 1.9%, $17.30 the ounce. And West Texas Intermediate crude down 2.2%, $66.78 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading day. It is time for the drive to the close. Back with us is Scott Kuby. He's Chief Investment Officer at Carson Group. He is with us on the phone from Omaha, Nebraska. Hey, Scott, good to have you back here on Bloomberg. How are you?
Great, and thanks for having me back, Carol.
Well, it's good to have you here. How do you see the market environment right now?
You know, we're seeing this as a market that's obviously rallied a lot. We've had some great earnings news that I think is pretty much fully reflected in market prices. And so from that standpoint, I don't think we're expecting super large, exorbitant gains from this point forward. But at the same time, I don't see that there's a lot of pressure against the market sending it lower with a couple, I think, major risk factors out there, COVID and some other ones that we can dive into as well. But what we see is a market that's reflected a lot of the good news is out there, and we don't really want to encourage people not to chase after markets that have already run from some news that's very much fully reflected in it.
All right, so a lot of good news out there reflected in the prices existing already in the financial markets, the equity markets, and yet you're not necessarily saying that we now deserve a pullback either.
No, I think that the valuations are in a reasonable stage, and we've also got a tremendous amount of momentum going in the market. One of the things I think we've learned from the corporate earnings news that came out this quarter, but actually even going back to periods about a year ago when things were obviously during the greater degrees of lockdown and challenges, is corporate America's ability to produce profits is really an amazing factor. It really starts to show one of those longer-term reasons about why we take risk in our portfolios, why we invest in the markets, why capitalism works for people, is because it generates returns and the people are managing the businesses very well. And whether it's smaller profits but more than expected during COVID or really large rebounds, what we've really seen is that participating as an owner in corporate America has been a great proposition for investors for really especially the last year and a half.
All right. So having said that, are there particular parts of the market that you would prefer being in right now?
Yeah, I think one of the areas that we continue to see some opportunity is in the technology space, especially in the security spot. One of the areas that we risk, from our macro perspective, is we look at a number of major risks that are out there. And one of them that we've identified is these attacks on companies that are, where they're held hostage with their computer networks. And that sort of attack is something that hasn't hit us real hard. It's been more of a minor irritant, but we rate that as one of our top risks out there. And I think that one of the beneficiaries of that are going to be technology companies, especially those that provide security to corporations, especially those really vital to our system. And so that's one of those longer-term trends from a risk standpoint that we think people will rally to, and that's one of the areas that we're looking for investments in is in the technology security area.
Right, and if you think about it, companies increasingly, they can't ignore it, right? Because their business is put at risk if they're not making sure that their business, and certainly as things are much more online and digital, like you've got to just make sure it's protected. China, something we just talked about with Andy Brown a little while ago of our Bloomberg New Economy about what's going on in China. How do you see it? What are the implications for investors as a result?
China has been another one of those risks that's been on our top 5 for really a while. We see a number of big trends that are negative, like the U.S. and China butting heads on a lot of different areas, partly from like the Chinese perspective. It feels like the U.S. is shutting them out of the value-added technology space just when their economy needs higher-paying jobs because they don't have the same population growth as they used to. In the shorter term, I think what we've really seen is that China is becoming much more negative in its efforts to try to control the capitalist tendencies that were so successful within the economy. That clearly is a very, very bad sign for investors, and that's been very much heavily reflected in prices. And I think there's also that we haven't seen much movement on trade or any other issues that have been rollbacks of some of the Trump policies. There have been a few minor adjustments, but basically, even though we had a change in administrations, I would say that overall system from a U.S. investor standpoint is probably more concerning than it was before, and therefore that's one of the big risk points that we've identified.
All right, that is interesting. What about the Fed as as another risk?
Yeah, I think that's definitely one that we see policy risk, partly on the fiscal side, but really with the Fed side. And I think that people are overplaying the risk of Fed too much to one side. There's the idea that
to the negative downside, to the negative side?
Yeah, to the hawkish. But there's also, in the sense that they could be too hawkish, and they can also be too dovish. I think the Fed's had I think they had a great response initially in COVID. They've had a pretty easy run. I mean, what are they going to do next meeting? Pretty much the same thing they've been doing for a while, meeting after meeting after meeting.
Well, they're not going to do anything to shock the world, right? Like we know, if anything we've learned, we understand policy will change, but we also know that the Fed isn't going to all of a sudden just go take a 180. That's just not how it happens.
And I think one of the things that you raised there is a really good point. I think investors are still concerned about going back to periods where the Fed had problems communicating well. I really think that the last few Fed chairs have done a much better job of communicating what their intentions were of the market. And so I see that sort of taper tantrum risk where the market gets surprised to be much lower. And I think Jay Powell and his team have done a great job of signaling what that is. And so that's a risk that we don't see as high, being that the Fed will surprise us. I don't think the Fed's got a big surprise built in their system. And that's one of the things that when we look at why we continue to invest, why we aren't so negative or as concerned as some people are, is just because we just don't see that risk as being particularly material. I think their tougher one is how soon do they start tapering and do they push it too hard? I think the last time when they tightened policy, I think in 8 consecutive meetings, and they rolled back some other policies in another one that were looser. So they basically tightened monetary policy meeting after meeting after meeting. That was too fast, and I think that's the harder thing for the Fed is to say, how do we do it? What pace do we do it so we don't get too far behind? But also in the last case that they got too far ahead and had to roll some of those back even before the pandemic started and really had a tighter monetary policy than the U.S. could really handle.
Commodity move today, significant in your view?
I thought the gold move was interesting because it represented a deviation from where really real yields are. It tied very closely. I suspect that's a supply and demand, something driven by investor moves. I also think when I look at oil prices, my expectation is that there's some degree of supply that is out there that is available to move in. The producers in the U.S. are trying to be more disciplined, but in the end, there's going to be more wells drilled. I think the other aspect is concern about how the Delta variant might slow down demand in China, more lockdowns essentially rolling through. And that's something important for U.S. investors to know is that we're not the biggest demander of most commodities. Most of the time the Chinese are, and actions that they take can actually directly affect our markets pretty severely because of the prices. I think that's a good reminder of what we're seeing. My expectation is oil will drift down lower, partly from supply and partly from some of the demand on COVID until we start to see those next waves of booster shots come out. We'll see some tightening of policy as far as lockdowns, but not a ton.
Dave Wilson, our Bloomberg Stocks columnist and editor, pointed out that when you take a look at the 10-year yield, it's at 1.32. S&P dividend yield is at 1.32. What does that say to you? And just got about 25 seconds here.
that the yield on the 10-year is not offer a really good return especially compared to where inflation expectations are and where they're going. And so that's a tough space, but it's still good for risk reduction. But yeah, longer-term bonds, we would expect to see yields drift up some over time.
But it is interesting to see them both right there smack on the same. Hey, Scott, good to check in with you. Scott Kuby, he is Senior Investment Strategist at the Carson Group on the phone from Omaha, Nebraska. We've just got about 3.5 minutes left in today's trading session, and just taking a look at the trade, we've been bouncing around here, but we are definitely off our lows of the session. We'll break down those closing numbers in just a moment and also look at some of the earnings as well coming in after the close. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, and Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell, our global simulcast. We're joined today by Carol Massar and just Carol Massar. Welcome back, Carol. We missed you last week. Let's bringing together our Bloomberg television, radio, and YouTube audiences. Carol, take it away.
I thought of you all on the beach. I mean, I actually was trying to relax, and people were coming up to me. Did you see this IPO? Did you see about this? I mean, look at this market environment.
On
I feel
the beach?
like
they were coming up to you.
Wow.
Say, leave me to my people.
They were relatives, so I did know that.
I thought it was just like random people. Like, there's Carol Massar. What's the market doing, Carol?
I don't know. Look at the trade today. Do you know what's going on? I feel sorry for the Fed, man. They're going to have fun at Jackson Hole this year.
I feel sorry for Carol when she's on holiday, being bombarded by questions about this market and the Federal Reserve. The Dow Jones, I mean, what's interesting today, though, Carol, is also... I feel everyone else is on the beach. You're looking at volumes down by 15% on the S&P 500, down 30% when you're looking at the Dow.
And it continues to be a market, Caroline, that is continuing to find out where we are. We just came off of a great conversation with Lori Calvasina on sentiment and levels versus sort of the absolute levels here that we're talking about. And this is a bond market that's trying to find its way. We're up 3 basis points on the day after the big movements that we saw on Friday after that big jobs report.
Yeah.
But at 132 is hard to argue the case for relative value.
Yeah, and we should point out it is mid-August, so I mean, you know, a lot of people really are out on the beach.
So let's all go to the beach.
Yeah, hi to all the folks watching down there at 2 Mile Hollow for us. About 17 seconds here to go in the trading day. Starting to get the closing bells, and it is going to be a mixed bag here. The Dow Jones Industrial Average right now, right around that 35,100 level here. Got down to about 35,041 on the day, so it's going to finish the day down about 0.3%. The S&P 500, basically call it unchanged. It's down right now just about 0.1%, down 4 points. Not a whole lot to be concerned about. The NASDAQ Composite and the NASDAQ 100 are going to be up about a 1/10 to call it 0.2% here on the day, but that's largely because of some of the oomph we got out of some of those COVID vaccine makers and some of the other biotechs. The Russell 2000, that is your big laggard here on the day, down about 0.6%. And just real quickly, I should point out, Dow Transport's actually down a full percentage point here on the day. Still some weakness there in that space.
Yeah, we do have a headline crossing the Bloomberg terminal coming from the Associated Press with the head of the Boston Fed, Mr. Rosengren, saying the Fed should begin slowing stimulus by fall. We're going to hear from a lot of Fed folks once again leading up to Jackson Hole, and investors trying to take this all in stride. At the same time, you have a lot of Wall Street strategists. They're putting out their targets for next year. They're kind of accumulating around 5,000, and you know, Taylor, that means a pretty bullish outlook from here.
Yeah, and you're getting similar comments to that of Rosengren from Mr. Raphael Bostic as well of Atlanta. In the meanwhile, equities try to figure out up until then, what do we do? For a radio audience, we're taking a look at individual sectors, half in green, half in red. You have to say in green, and Romaine, kudos to you. You've really been on top of this. The biotechs, right? The Modernas that are really leading the pharma index. You're up about 1%. Yields are up for 2 days after that jobs report. So you're getting insurance and some of these financials also leading the way, up about 0.3%. I'll take us down and migrate towards the bottom. Romaine and Carol, of course, you're getting transportation, energy, consumer durables, sort of that reflationary trade unwinding just a little bit today, Carol.
Hey, Taylor, I'm going to take you to some of the gainers and decliners in today's session. Tesla among the gainers in today's session, up about 2.1%, upgraded to buy over at Jefferies specifically, and they were actually coming out with a lot of the car makers and kind of weighing in on how they all stack up. They also raised their price target in Tesla to $850 from $700. They say earnings starting to accelerate, EV demand demand grows. And they also talk about Tesla not having all those legacy issues based on some of the other traditional car makers. So they like Tesla. Moderna continuing its upward trajectory. Guys, up another 17% today, another record. It's up about 340, 350% today. Top in the NASDAQ 100 and S&P 500. On the downside, Wynn Resorts, they got a downgrade to neutral from B of A Securities. And then that stock was down, as you can see, almost 2.8%. And Marriott, I just want to mention, down 3.2%. It was a top decliner in the S&P 500 and NASDAQ 100. Watching, right, guys, those hospitality stocks.
You get a fire emoji for that one.
What?
Fire. You're on fire. That's good, right?
Okay.
Unless Gen Z might say it's bad.
I don't know.
Carol's on fire and is clearly still thinking about vacation with ending on 2 hotel stocks. Meanwhile, I look at what's been on the downside throughout the day, has been a story of what's happening in terms of foreign currency. It's a sea of red, this vertical, when you go across asset. Global macro movers for you. Why? Because the dollar is in the green. We are seeking that haven of US dollar. We are wondering whether the Federal Reserve is going to be raising rates sooner than we'd anticipated. More hawkish comments coming from the likes of Raphael Bostic, our second favorite Bostic over here. Meanwhile, Swiss franc off by 0.6%. We saw, of course, some of the...
You get a heart emoji for that.
Yeah, oh, thank you, heart. Meanwhile, all heart remain not what's being loved today. If you had emojis for the commodities space, it would not be hearts. We are down across the board. Why? Because the dollar is in position of strength. Brent crude off by more than 2%. WTI crude off by more than 2 percentage points, reflecting the concerns of the Delta variant. Gold also lower, even though I love the clapping for Team Volleyball, USA Volleyball, just there at the closing bell at the New York Stock Exchange. They brought home their gold, but no one else liking gold today, it would clearly be. And I'm looking at a mixed picture when it comes to sovereign bonds, Taylor. You can do this better than me.
Yeah, just real quickly, I'm going to jump in here. We actually have some breaking news here. This is on Kansas City Southern. Remember, Kansas City Southern in that agreement with Canadian National Railway, a $30 billion merger. Canadian Pacific had been bidding. It actually dropped out of the bidding. Now we're getting news out of Dow Jones saying Canadian Pacific actually plans to a new and higher bid for Kansas City Southern. Not quite sure exactly what that bid is going to be, but it presumably is going to be higher than that $30 billion agreement that's already on the table, a deal that investors were actually prepared to vote on, I believe, on August 19th.
Yeah, really good. You've been keeping us abreast of that. Let me try to keep you abreast of what is going on in those bond yields, Caroline, because you did mention, indeed, it has been priced lower, yield higher. It's a continuation of what we saw on Friday after that stronger than expected jobs report. So you're now up about 3 basis points across the board here, up to a 132 on the 10-year, a 196, Carol, on the 30-year, all as we are slowly really trying to approach that 2% level.
All right. Definitely watching that level. I'm also watching the level of Smile Direct in the after hours. It's now down about 10.5%, coming out with their earnings for the second quarter, guys, and it's a disappointment. Second quarter loss of 14 cents a share. The estimated loss was for 9 cents a share, so that's bigger by a nickel. Also sees the year-end revenue 750 to 800 million. That's a little light. 833.8 was the estimate. Second quarter revenue, let's take a look at that. 174.2 million versus the estimate of 198.5. So it just looks like they are missing on so many different accounts, including the outlook, Taylor, and that's why you're seeing that stock, which is down already 44% so far this year, down another 10.5% in the after hours.
And speaking of also missing, Carol, I take you forward to Planet Fitness, looking at full year adjusted earnings per share of just 65 to 70 cents. Analysts really wanted 92 cents. Second quarter adjusted per share, we mentioned we'd wanted 23 cents. The market now seen and the company really guiding us down to about 21 cents. You're really getting, Caroline, a big miss perhaps on some of the forecasts, some of the forward guidance. They're saying that they added 700,000 net new members, marking the 6 consecutive months of net member growth, but frankly not able to do it down the income statement.
And also what's missing, and a company that has 0 sales on it, but I mean, it fell 17% after its last earnings. Now we look at these earnings for the resale giant, the Real. They're coming out with second quarter revenue, $104.9 million. The estimate had been for 108. Their loss coming in bigger than expected at 50 cents. The market had been wanting to see a 43 cents overall. Many had felt that this was the time to be seeing a purchase more of luxury items. People got cash a splash, an ability to spend it on perhaps more better value luxury goods. But nevertheless, in the statement, they say, we're pleased to report another quarter of strong growth and believe the strength of the current trends in the business will continue for the balance of this year. But thus far, market not liking it.
This is used clothing?
This is used. You go and sell your used.
And purses,
really nice high-end used
and
clothing.
Sunglasses.
Nice and bags and stuff. So people don't actually buy new clothing from them.
Correct.
Depends. I mean, some of the stuff can be as if it's new. Maybe you bought some, didn't like the sizing, you set it on the real.
On the real. Okay. All right. That's interesting.
Not a plug.
Not a plug. All right, let's quickly, another breaking news here. This is on Tenet Healthcare. New CEO here, Ron Rittenmeyer, going to be stepping down. He's going to remain as executive chairman. They're naming Sam Sataria as CEO. Of course, this is a big healthcare hospital operator getting a new CEO.
All right, so kind of interesting. I mean, I'm just looking at these earnings, you guys, and so I feel like we're not getting braces. We're not necessarily going to Planet Fitness. We're not buying high-end luxury items. I mean,
what are we doing?
I'm
apart from sitting on beaches and fielding questions from our family members.
That's pretty good. Were you on a yacht? Tim said you were yachting.
Yeah,
I was not yachting.
You were not yachting.
We envisaged you.
Was there any yacht rock played while you were out on the beach?
There might have been a little bit of that. Okay. And some good margaritas, I'm just going to say. We've got a busy week, folks. We're going to have it all covered, including inflation data, so lots to come. Well, we'll talk maybe.
Inflation data. Get the praying hands emoji for that one.
I know how we roll. I know how to roll here. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. Catch us tomorrow, same time, same place, everyone.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, so a batch of earnings after the close. We mentioned just covering it as we wrap up. As you know, Dave Wilson talking earlier about the bulk of earnings. It's already out there, but we continue to get from some companies. We mentioned the Real. That's going to be trading probably lower potentially. It is in the after hours down 5.7%, so we'll watch that one in tomorrow's session. I mentioned Smile Direct. That, too, is lower big time. It's already been seeing a lot of selling here in 2021, down another 15% here in the after hours. And then Planet Fitness was another one that came out, and let me just pull it up here and just see what the stock is doing in the after hours. And we did see that stock down. It's now down about 4.4%, so we'll continue to track that certainly into the Tuesday trade. Coming up, though, next here on Bloomberg Business Week, we're going to talk a little bit about commercial real estate. This is something we watch so closely, talk about a lot, trying to get an idea of how do we use real estate going forward. Are there new trends post-pandemic? We're going to check in with the managing partner of Romer DeBoss. That's coming up. Right now, though, off to World and National News and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. All U.S. service members will have to roll up their sleeves for COVID shots by mid-September. Pentagon spokesman John Kirby says the decision was made by Defense Secretary Lloyd Austin, and Kirby says the mandatory order could happen even sooner, depending on formal approval of available vaccines.
What he's asking for in this message to the force today is don't wait. They're safe, they're effective, they work, they make us a more ready force, a more lethal force, and there's no reason to wait for the mandate.
Kirby says more than 70% of all active duty service members already have received at least one shot. New York State Assembly is continuing its investigation into Governor Andrew Cuomo after hearing from lawyers who've been looking into sexual harassment allegations against him. Speaker Carl Heastie says the Assembly's Judiciary Committee will hold hearings throughout the month to decide the next move.
We are at a historic moment in our state's modern history. For the first time in more than 100 years, the Assembly is undertaking an impeachment investigation of a sitting governor.
Heastie says Assembly members have no confidence in the governor to remain in office. Earlier today, one of Cuomo's accusers talked with CBS This Morning and the Times-Union of Albany, detailing several groping incidents. Cuomo has denied the allegations. Well, after several delays, the first phase of the sex trafficking trial of R&B star R. Kelly has begun with jury selection in New York City. A judge questioned potential jurors in federal court in Brooklyn. The proceeding comes 2 years after Kelly was charged with abusing women and girls for nearly 2 decades. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Joining me once again, Charlie Pellet of Bloomberg News. Charlie, this story, a must-read by our Polly Mosens and Kate Crater. Kate Crater is food editor here at Bloomberg Business Week and Bloomberg Pursuit specifically, and it really goes through specifically how restaurant owners, man, they have had to wear different hats during the pandemic and changing hats as it's evolved from being shut down, figuring out how to pivot to keep the business going, to now as we reopen, they're often kind of having to be bouncers.
Yeah, exactly. And I thought about the irony of this because one of the reasons you go to a restaurant is for a great food, of course, but you also go for a warm, welcoming, kind environment, not somebody who's standing at the door saying, show me some ID before you come in to eat. And it puts these people in a very, very, very difficult position. I know in the Masser household, you guys have a tradition of pizza on Fridays.
We do.
Pellet household, we like to go out for sushi on Friday nights. And, you know, for months, we've been bringing in sushi rather than going out. Recently, we started going out again. You know, it really is a mixed bag because restaurants that I've been to, not all restaurants are checking. Not all restaurants give anybody, you know, a hard time, but other restaurants apparently do.
Well, and this story, what I love is it just gets very specific. They talk about the owner of the Michelin star Muscat Room in Manhattan, Soho, and all the pivoting they did, a delivery menu, a brunch menu to bring in customers. They borrowed a van to sell donuts and cocktails in front of the 8-year-old restaurant. Well, then as things started to open and people wanted to dine indoors, they said, okay, if you want to do that, you've got to be vaccinated. And they tell a tale of when a group of 5 guests arrived for dinner one evening, 2 covertly passed a phone between them trying to prove that they were vaccinated by using the same Excelsior pass, which is what's being used by New York State. Basically, you know, remember when you were like 18 and you had your sisters?
Exactly. Now you're passing the phone back. And also, too, I just want to briefly walk back by my remarks on saying give people a hard time. No, they're doing the right thing in checking whether you have the Excelsior pass, and more people ought to be using the pass.
Exactly. So it's just tricky times, and it just seems to be constantly tough for restaurant folks.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Rapid fire earnings after the close of trading. AMC Entertainment second quarter revenue $444.7 million. Estimates $382.3 million right now. AMC shares, that's the movie theater chain, and a meme stock up now by 3.5% in extended trading. Planet Fitness guiding lower, sees fiscal year adjusted EPS in the range of 65 to 70 cents. Estimates had been for 92 cents. Shares of Planet Fitness, PLNT on the ticker, if you're wondering, down by 6.7%. Callaway Golf forecasting net sales for the third quarter. That guidance beating the average estimate. We've got shares of Eli, ELY on the ticker there, named after its founder. Eli Callaway, shares up now by 3.6%. Again, AMC Entertainment second quarter revenue did beat estimates. Turned out to be a down day. Stocks declining on stimulus and virus concerns. S&P down 4, drop there of 0.1%. The Dow down 106, a drop of 0.3%. NASDAQ up 24, higher by 0.2%. So a retreat from records for the Dow and the S&P. 10-year yield 1.32%. Gold down 1.9%. 17.90.29 the ounce. 17.29 on gold. And West Texas Intermediate crude down 2.1%. 66.84 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate those after-hours numbers, too, from AMC. All right, so real estate is something we like to talk about a lot, and we do it and cover it a lot here at Bloomberg. And there are a few stories today. Blackstone Real Estate Investment Trust acquiring WPT Industrial Real Estate Investment Trust. That was a cash deal valued at $3.1 billion, included debt. WPT, if not familiar, they focus on distribution and logistical properties. You've also had the Biden administration urging state and local governments to move quickly to distribute billions of dollars provided by Congress to help struggling renters and landlords. So there is a lot always going on when it comes to real estate. So someone who's got a front row seat to it all, Pierre DeBas. He is co-founder, managing partner of Romer DeBas. It is the boutique real estate law firm. It's based in New York City in Midtown Manhattan. And he is back with us on the phone in New York City. Pierre, good to have you back. How are you?
Carol, great to hear from you. Thanks for having me back on the show.
Well, it's great to have you here. How are things going? And I think the last time we talked was back in November. Tell me how the world is right now from your perspective.
Well, it's a loaded question, but luckily it seems that we've been in an upward progression, and I think that everybody in town is sitting here saying is the Delta variant going to take us a step back, and praying that we don't go back to the shutdowns and level of protocols that we're having several, probably last we spoke in November. Ironically enough, even with saying that, our real estate market, though, as you're reporting on daily, is at record highs. I mean, I'm looking, I'm a real estate lawyer in Manhattan, and I look at our Manhattan market and also the nation's housing market, and they're both the most active and busiest I've ever seen in my entire career, which is remarkable given, how we started off this conversation with worrying about what's going on in the world and taking a step back.
Is it still so much people running from cities? Like, how do you explain the activity right now?
It's funny because a while back, it was no secret that a lot of people, there's somewhat of an exodus of people from New York City, mainly renters who said, if I can be remote and virtual, why not live in a lower cost living state, have a house, have more space, work from home, and I will find a job that's either fully virtual or, predominantly virtual. And that was the catalyst for what started driving this, robust housing market that we're in. But then, when we're talking present day, that statement's kind of counterintuitive to the fact that New York City real estate's doing exceptionally well. So what is driving the housing market? Because it's not the exodus of people from cities. People are flooding back to Manhattan right now. I mean,
you're seeing strong trends back.
Oh, yeah, absolutely. I mean, the co-op condo townhouse market in New York City is the most active I've ever seen it. And it's been that way since the beginning of this year. So you can't even attribute it to pent-up demand from 2020. I mean, this is not pent-up demand. This is a new market.
Well, that's interesting, Pierre, because is it because people have money to put to work? I mean, the pandemic was this really odd thing where some people, a lot of people, if you were in the markets and so on and so forth, you ultimately, benefited. I hate to use those words, but there was a lot of wealth creation. We talk about it all the time here at Bloomberg, and there was a lot of wealth creation that people are now putting to work in terms of real estate investments.
Yeah, no, I mean you're spot on. When you look at when you reference the stock market, I think at the depths of March of 2020, the S&P had dipped down to as low as 2,300, and now we're sitting here today. I think it's between 44 and 4,500.
Right.
So whoever's in the market made a substantial amount of money in the last year and a half. I read a great stat a month or two ago that the percentage of billionaires in the world in 2020, I think, increased. It was roughly 28%, somewhere in the 20s.
Right.
In 1 year in the middle of a global pandemic. I mean, that's a staggering statistic. And that is translating to a lot of our demand for New York City real estate, because on the high-end side, which is where we're seeing the most activity or record levels of activity, that's where the steepest discounts are in the residential market in Manhattan. And people who had obviously made a lot of money in the last year or two are taking advantage of buying at this discount, knowing that it's the city will undoubtedly come back. It just, they're okay riding out a couple years. But even to that, I'm seeing now in the last couple months, the amount of renters coming back has skyrocketed as well. So, and that's not driven by, the high-end, purchaser. That's really driven by people coming back, anticipating living here and working here again.
Yeah, I've seen a lot of fluid just among, or movement, I should say, among colleagues and some buying, but some also renting. And I said to them, so did you get a deal? And they're like, yeah, maybe they took off $100. Like, not really a deal anymore. It's not like it was 6, 7, 8 months ago.
No, the rental market has definitely rebounded significantly. A year ago, I mean, you could have named your price in whatever concession you want. But again, I mean, being based here, you walk around New York City, for the people who haven't been here in a couple of years, it doesn't look like it did in 2019 and before, but it looks night and day than what it did last summer at this time.
Hey, Pierre, sit tight for a second. I got to do a little bit of news, but I want to come back and continue talking about commercial real estate. I want to talk about those first-time home buyers, because there is concern that they are being priced out of the market in a big way, and also talk about maybe foreign investors and whether or not we're seeing those flows as well. We're going to come back to Pierre DeBaas. He is managing partner. He's co-founder of Romer DeBaas. It is a boutique real estate law firm based in New York City. They're working with buyers, with sellers, all kinds of commercial properties and residential properties. So we'll continue that conversation. Just a reminder of how we closed in this first trading day of the week, our first full week of, I believe it's our first full week, now our second full week of August. Dow down about 106 points, S&P down 4, and the NASDAQ up 24. That's what happens when you go on vacation. You lose concept of timing. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. I'm Carol Masser in our Interactive Brokers studio. We're going to continue talking about commercial real estate with the co-founder and managing partner of Romer DeBaas, Pierre DeBaas. We'll get back to him in just a moment. Right now, though, let's get a check on some of the stories after the close, those closing numbers. Here is, once again, Charlie Pellet.
Hi, thank you very much, Carol Masser. Happy Monday. Back to work Monday. Do want to begin with a headline out of Arkansas, where the state is reporting the largest number of COVID-19 hospitalizations in that state since the pandemic began, as the virus surge continues. Earnings after the close, we heard from AMC Entertainment. It reported revenue for the second quarter that did beat the average analyst estimate. Shares up now by 4.6%. Planet Fitness has forecast adjusted EPS for the full year. That guidance did miss the average analyst estimate. Shares now lower by more than 5%. Callaway Golf forecasting net sales for the third quarter. The guidance beating the average analyst estimates. ELY on the ticker, up now by more than 3%. Also after the bell, Canadian Pacific said to be planning an increased offer for Kansas City Southern, that according to Dow Jones, citing sources. Stocks dropped from records. Commodities slumped as investors weighed concerns about a pullback in stimulus and a resurgence in the fast-spreading Delta virus variant. S&P down 4, drop of 0.1%. The Dow down 106, down 0.3. NASDAQ lower by 24. NASDAQ higher today by 24, up by about 0.2%. 10-year yield 1.32%. Gold lower by 1.9%, $17.30 the ounce. And West Texas Intermediate crude down 2.1%, $66.84 a barrel. As for the overall market backdrop, Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
I think that once the COVID and growth clouds clear, we are going to see another pop in value, but we do think that that will probably be somewhat short-lived because we do have Fed rate hikes, sort of on the horizon in late 2022, most likely. And that typically does kill the reflation trade. We typically see value stocks working relative to growth. We also typically see small caps make a major peak relative to large caps when the Fed is hiking. So I think you've just got to be nimble over this next year and a half between these leadership shifts.
Norwegian Cruise Line Holdings has won a preliminary court injunction that allows it to require proof of COVID-19 vaccination as a condition of boarding its ships in the state of Florida, despite a recent ban on such requirements under a new law promoted by Governor Ron DeSantis. Florida says it will appeal. I'm Charlie Pellet. That Carol Masters of Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. I want to get back to our guest, Pierre DeBaas. He is co-founder, managing partner of Romer DeBaas. As I mentioned earlier, the boutique real estate law firm. It is based in Midtown Manhattan. He's still with us on the phone in New York City. So I have a couple of things I wanted to pick your brain about, Pierre. First of all, first-time home buyers, are they being completely squeezed out of the market?
Yeah, I mean, that's a great point to bring up, and the answer is yes. At the moment, the last week or earlier in July, I should say, the housing market hit another record level in terms of pricing. And what we're seeing in the marketplace is that roughly 25% of all purchases that have taken place this summer have been cash purchases. Wow. So that is, I don't recall ever seeing such a significant portion of all deals being on a cash basis. And, majority of first-time home buyers, I believe the average price was $353,000. They're not buying that in cash. They're putting down 5%, 10% maximum and getting a mortgage. And the problem they're encountering is that sellers in markets that are very, very hot right now are not consenting to mortgage contingencies, and banks have become more conservative in their lending, requiring higher down payment sums. Mm-hmm. So the net effect is that first-time home buyers and the millennial generation are being pushed out of the market in most parts of the country at the moment.
It's interesting you say that about banks too.
Okay, traders, I'm going to place a stop on profit to 117.39.4. Okay, I'm going to move my stop on profit to this level. It will give us 5 pips in profit. So if you want, if you started following my trades, and if you started trading euro, with me, please place stop on profit at 117,394. Okay? Stay safe.
Deals and banks having more stringent, underwriting regulations and standards, that would lead you to believe that we're not in a housing bubble, because this market's not fabricated by something that wasn't real,
right,
in the sense of subprime lending where, banks were just giving a mortgage to anybody in town with no income or verification or anything.
So you don't see sloppy deals being done?
I know, from my perspective, I really don't. We have a majority of our clients are in the New York City area, but we've represented a number of people who've gone to other parts of the country, and I'm not hearing of any sloppy lending or transactions at all.
When you look around the country or look around the world, but country specifically, we've talked about Austin being popular and some of these secondary and tertiary markets. Where do you see a lot of people going and wanting to buy?
Florida's obviously been a huge beneficiary of everything that's going on, and that's for a number of reasons. One, given the weather down there, the COVID pandemic, and not to go into political conversation what they're doing down there, but I don't think the risk was as high there as it was in densely populated cities that it's known that the virus wasn't as contagious in warmer weather and outdoors. And then also you're looking at it from the perspective of taxes and cost of living. With no state or city income tax in Florida and a lower cost of living, I think that Florida has probably been the biggest beneficiary of this whole pandemic. If I recall correctly, I think Florida had the highest number of new residents move there in 2020.
Right.
Florida, I think Texas was number 2.
I think because I know we've talked a lot about increasingly the financial community, moving down there, setting up shop, but there does seem to be a fairly big migration down there, as you pointed out. Hey, listen, just got about 45, 50 seconds left here. There are so many things we talked about, trends and things being changed because of the pandemic. Is there any trend because of the pandemic that you think definitely stays with us longer term? Just quickly.
I think that the hybrid structure of remote work and coming into office a few days a week is here to stay. Some of the major investment banks are trying to, force people to come back into the office, and you're seeing that's being pushed back by a majority of major corporations due to the Delta variant. And I think it's inevitable that, a hybrid model will be here to stay, and that's going to impact how we operate as a society tremendously over the next, several years.
Hey, quick follow. So does that mean corporations, they are going to cut back on their commercial real estate needs? Just got about 20 seconds.
Yeah, I think that, to what extent they're going to cut back is a question, because even if you're in a hybrid policy, you still need space. And, are you going to go on a rotation in terms of offices, or are you going to look at it that people are just as productive and revenues, just as good, if not better? I don't need to really downsize my real estate holdings that much. That's the million-dollar question over the next couple of years.
Well, and it's something I know we'll continue to reach out to you about, because you really just have a great view and vantage point. Pierre, thank you so much. Pierre DeBoss, co-founder, managing partner of Romer DeBoss, joining us on the phone in New York City. Out to D.C. we go, 99.1 Newsroom in the nation's capital, and Nancy Lyons. Hey, Nance.
Hey, Carol. Members of the U.S. military could be required to have the COVID-19 vaccine beginning September 15th, rather. This is under a plan announced by the Pentagon today and endorsed by President Biden. The deadline could be pushed up, though, if the vaccine receives final FDA approval or if infection rates continue to rise. Defense Secretary Lloyd Austin says he will seek the president's approval to make the vaccines mandatory no later than mid-September. A committee of the New York State Assembly has been learning more about an attorney general's investigation into sexual harassment allegations against Governor Andrew Cuomo. And Judiciary Committee Chair Charles Levine explains their next steps.
We expect to hold public hearings to present testimony from independent experts on key subject matters related to the impeachment inquiry.
Levine says Cuomo will be treated fairly. The governor has denied the allegations. The Assembly Speaker, Carl Heastie, says members have no confidence in the governor to remain in office. A UN report on the climate is being called a code red for humanity. The chair of the report, Ho Sung Lee, says Earth is getting so hot that temperatures in about a decade will probably blow past a level of warming that world leaders have sought to prevent.
It is indisputable that human activities are causing climate change and making extreme weather events more frequent and severe.
Lee says greenhouse gas levels in the atmosphere are already high enough to guarantee climate disruption for decades, if not centuries to come. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
So this story is a sign of the times on many levels, but mostly I would think it's safe to say because of climate change. I'm Carol Massar in our Interactive Brokers studio. Joining me is Charlie Pellet of Bloomberg News. And Charlie, this is a story from Dow Jones, Wall Street Journal, and it basically talks about the wildfires that we continue to see around the country, especially out there in the West and the Pacific Northwest that we've seen certainly this year. And as we see more and more, and they go on, the duration of them for a long period of time, what's happening is the United States, we can't find enough firefighters.
Indeed, and the offer to pay more pay for these men and women, maybe that'll get them back. But the journal Alicia Caldwell says, cites the example of a Willie Sloop who left his job as a wildland firefighter for the Forest Service about 2 years ago. And even though he's gone, Willie says he's getting multiple emails asking if he wants to come back, and the folks at the firefighting agencies just say they've got shortages all over the place. And you'll listen to the absolutely heartbreaking stories coming out of California, indeed the western part of the United States. They can't get enough help right now.
This Mr. Sloop that you mentioned that was written about by Dow Jones Wall Street Journal says he can't justify leaving it for a seasonal job, which is the firefighting job, where the pay typically ranges from $15 to $18 an hour. Benefits are rare, and higher wages for overtime mean putting his life at risk. Here's some numbers, Charlie. The federal agency, the Forest Service, currently has about 10,000 wildland firefighters on staff, about 3,000 of whom are seasonal employees, combating just over 100 active fires nationwide. Roughly 2.2 million acres have burned so far this year. That's a million more than at the same time last year, according to the National Interagency Fire Center.
Indeed, and if you go to look for one of these jobs, the correct title, not firefighter, but forestry technician positions is what you're looking for.
Yeah, exactly. But and they're thinking about maybe raising the pay to get more people to maybe come in and fill those open positions. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Okay, guys, I need to place stop on profit even to better position for our advantage. So I'm going to place stop on profit to 117, 37.4. No, I cannot do this. Broker not allowed me to do this. I will put 117, 38.4. If it will move lower, I will place to lower position. It means to even better advantage towards our profit. Speak to you later, guys.
0.1%. The Dow down 106, down 0.3. NASDAQ up 24, a gain there of 0.2%. 10-year yield 1.32%. Gold today down 1.9%, 17.29 the ounce. And West Texas Intermediate crude oil, WTI, down 2.1%. Perella Weinberg Partners has told staff primarily in New York and London today that return to office plans will be delayed as the COVID-19 variant spreads. I'm Charlie Pellet. That's a Bloomberg Business Flash.
It is. Charlie, thank you so much. You are listening to Bloomberg Business Week. So among our most read stories on the Bloomberg today, an opinion column written by the founder of Bloomberg LP and Bloomberg Philanthropies. We're talking about Michael R. Bloomberg, and it's about how the pandemic has done harm to students and how opening schools should be priority number one. Now, many others have also written and reported on the impact that the pandemic has had on students of all ages, and in particular, younger students. So here are some thoughts on that, especially as we gear up for the school season. Actually, some kids already back to school, depending on where they are in the world, and certainly around the United States. Is Dr. Liz Brooks. She is Chief Learning Officer at Lexia Learning. She joins us on the phone from Boston. Liz, nice to have you here. How are you doing?
I'm doing great. Thanks so much for having me, Carol.
Well, it's great to have you here. And I think, we are all thinking a lot about kids going back to school. Some are already there. And especially after the year that we've had, the last year and a half or so, where it's hard not to think that kids have fallen behind in some regards. It's not all equal, as we know. But you are looking at that and thinking about literacy in particular. Tell us a little bit about your organization. You guys have been around for some 35 years. First of all, when it comes to literacy, has it gotten better or worse in this country?
Well, it's a great question, Carol. So first, I'll tell you about Lexia Learning. So we are a structured literacy expert that has been around for over 35 years. Since 1984, we've been using technology to empower educators. We were founded on a grant from NICHD, so we understand that rigor of true research and the importance of effective outcomes for students. So your question around has literacy gotten better or worse? I think there's been a shift, especially in the last few years, focusing on the science of reading. That's the great part, is we know from decades of research how to best teach reading. And more states are starting to embrace making sure that their teachers understand the science of reading and the application of that, which is structured literacy.
Okay, science of reading. Tell me what that means, because I think I'm someone who grew up just loving to read, and I was lucky enough to have a daughter who loved to read, and we just spent endless amounts of time at bookstores. What's the science of reading?
Sure. So the science of reading is essentially the accumulation.
Okay, guys, 117, 37.4. 117, 37.4. Okay? Stay with me. We didn't close yet.
That is essentially that accumulated evidence of research. And then you may also hear the term structured literacy, which is essentially how do you apply that research to the practical world of the classroom, which is where Lexia comes in. That's one of the things we strive to do, is translating research into practice. And especially this last year and a half, and moving forward, it's critical that students and educators have tools that have the research to prove that they work.
And
right? We don't have any more time to waste for these students.
No, exactly. Tell me about the complementary, I'm assuming you're going to say complementary relationship between technology and literacy.
Absolutely. I think technology, gets a bad rap, and it's never designed to replace a teacher. That's the first thing, right? It's designed to empower a teacher. But when you're thinking about technology, you want to think about what are your goals, and you're not thinking about technology first. You're thinking about what are our literacy goals, and then how can we use technology as a tool to help us achieve those goals. And again, when you use it to empower educators with real-time data or personalized learning paths for students, it can be a really powerful tool for students and educators, especially in this time when a lot of schools were thinking they were going back to 100% in person, and now with the Delta variant, we have to make sure we can leverage technology to have that flexible implementation model in case we have to have that hybrid approach again.
All right, so my radar has gone on or up or whatever you want to say, because when you say the use of technology, there are schools struggling just to have textbooks and basic supplies for their kids. So it makes me a little nervous when you're talking about the use of technology to achieve those literacy goals. And I do wonder if, once again, we're going to widen the gap because there are those kids who maybe really dearly need it, the technology and access to it, to help them achieve their literacy goals, and they're not going to have it.
Absolutely. So it really does, the thing, it takes a village. When you think about the digital divide and equity, instructional
basic supplies for their kids.
You have to think
so
about two
it makes me a little
right?
nervous
so
when you're talking about the use of
making
technology.
Sure that schools have connectivity, students have devices, whether it's in school or at home. So we've seen some great partnerships in the communities with the local businesses, driving buses into neighborhoods with hotspots on them. So that is a whole piece of this, as well as to continue the work to close that digital divide. We're working with the community, working with businesses. And then the instructional programs that use technology, the ideal, and this is what is true with Lexia, is blending what we refer to as the HI, the human intelligence, with the AI of technology, right? So you want to make sure that you always have that human element, even if it has to be virtual, that has paper-based components, that has non-technology components, but it's still personalized, right? Because we want those students, even though they may not have access to technology, they should still have access to that personalized, effective instruction.
Right. It's not one size fits all, certainly when it comes to something like this. I hope we can continue this conversation in the future, because it's obviously a vital one to our kids out there. Dr. Liz Brooks, she's Chief Learning Officer over at Lexia Learning, on the phone in Boston. All right, right now in our 99.1 studio in the nation's capital is none other than Joe Matthew, Sound On host for Bloomberg Radio. So, infrastructure?
Yes, you took a week off, still not passed, but looks like it's about to happen here, huh?
Really?
Really. And apparently very early tomorrow. They could have a vote, I'm told. Wait a minute, at 4 a.m.?
What?
I have to be up for that.
What?
Yeah, that's real. This is going to happen in the next couple of hours.
And then they move on to the next phase of the Biden administration.
Enter reconciliation. You know the drill.
It's what have you done for me lately?
Welcome back.
Looking forward. Thank you so much. Joe Matthew, of course, host of Bloomberg Sound On. That's coming your way in just a moment. For the whole Bloomberg Business Week team, good to be back. Have a great evening. This is Bloomberg.
innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the Senate moving closer to passing the $550 billion infrastructure plan, but crypto regulation still a holdup. We're going to get reaction from Circle CEO Jeremy Allaire, the co-creator of a stablecoin worth more than $27 billion in just a few moments. Plus, parties, dating, and drinking at work. Video game maker Activision Blizzard facing a slew of allegations from current and former employees, calling out a toxic office culture and, quote, frat boy environment. We will dive into the claims with a Bloomberg exclusive report. And scientists at the UN issue a code red on climate change, stating that we will see warming temperatures until at least 2050, and that time is running out. We'll take a look at the latest report and mounting pressure on world leaders to do more. All that in a moment, but first let's get a look at the markets with Kriti Gupta, and it was a mixed Monday, right, Kriti?
It absolutely was, Emily. Like I said, you saw a little bit of mixed picture, a little bit of tech outperformance, or what it looked like tech outperformance on the surface. Let's just dive in here. S&P 500 ending the day flat, was negative by a far larger margin at the open, so you did see some buying the dip, but just not enough to turn it positive on the day. Then you did see the NASDAQ, like I said, outperform. You'd think it was big tech, but it wasn't, because take a look at this. New York FANG Index up just 0.2%, not enough to make that kind of difference. And of course, you even saw the SOX Index down 0.4%. If this was a big tech day, semiconductors would be on board. So let me show you what was really driving the market today, because it was really all about commodities. And this is really where you're talking about the China growth story, those Delta variant, the Lambda variant perhaps weighing on what the growth trajectory might look like. So some kind of
traders, I'm going to move my stop on profit to 117.37. Hopefully I will close this trade today, because we're going for newbies, we're going on holiday for 1 week. So we're going to do some maintenance of website, and we'll try to make it better. So I'm trying to close this trade tonight, and I'll speak to you next Tuesday or Wednesday next week. It will be just 1 week holiday. Okay. So I'm still trading, so I'm trying to close this trade. And right now the price I placed 117.37. Okay. Now I'm trying to place at 117.36.5. Let's see if I'll be able to sell it. Speak to you later, guys.
In the US weekly COVID rate, what we're seeing is that when Peloton's share price peaked in January, it started to fall as those cases came down. As those cases have been rising since the bottom in May, then again, what we see is that the Peloton share price has been rising with it. Finally, I'm looking at Moderna, incredible gain of around 17% on Monday. That's its biggest gain since November of last year, when those approvals were going through for the vaccine. All-time high for the stock. No hard news, but again, according to sources, the US is going to be taking some doses from Moderna to give to Mexico as a form of donation aid. That seems to be supporting the stock on Monday. Emily.
All right, Ed, thanks so much. I want to get back to the latest on the infrastructure bill and cryptocurrencies' role in it. I want to bring in our Anne-Marie Horton in Washington. Anne-Marie, what's the latest?
Right now, we are seeing a little bit of a hurdle, Emily, when it comes to that cryptocurrency bill. And it really was a domino effect of procedural votes here in the Senate. So we have Senator Shelby wanting to bring an amendment to the floor, which had to do with more defense spending. And then you have Senator Bernie Sanders wanting to not allow that amendment. Remember, when it comes to amendments, you do need 100 senators to be on board to get that to the floor. So then you have Senator Shelby saying, okay, if my defense spending can't get to the floor, then I am not going to go ahead with this new crypto amendment that earlier today really was a bipartisan effort to try to see both sides of the aisle when it came to the cryptocurrency industry. And that is right now where we have a little bit of a hurdle, I would say, in the Senate. Other than that, a lot of the other objectives of the plan do seem to be like they are getting the bipartisan support. Earlier, a Senate aide had said to me that we could see a vote on this around 11 a.m. tomorrow.
Moving price? No, I can't. The broker increased margin, so I'm still at 117.36.4.
Lead to broad oversight of the cryptocurrency
industry. I'm still at 117.36.4.
The language as it stands right now.
Exactly. If this amendment does not get to the floor, does not get a vote on, and does not get part of that text, then if they vote for the bipartisan infrastructure agreement without that amendment, then as the text stands right now is where they would be voting on it. And as you say, this is very much so a very broad purview of having data collection to the IRS for many in the cryptocurrency world. And as you say, Emily, many in the industry are against this, including Jack Dorsey, who's been quite prolific on Twitter throughout the week, especially today, tweeting about this, because they say it should potentially be for traders and brokers or people who trade in the crypto space, but not for those that are doing software design or miners. So this is where the language differs, and it does seem to be that it's still taking a little bit of a debate here on the Senate floor.
All right, Emery Horton for us in Washington. We'll continue to follow how this plays out. For more on the infrastructure bill, what it means for cryptocurrency and the industry itself, I want to bring in Jeremy Allaire, the CEO of Circle. Jeremy, thank you so much for joining us. So look, what's your take on the language in the bill as it stands now, the fact that this compromise did not happen?
I mean, there are a few, I think, really important comments here. I think the first is it's been remarkable over the past week to see the amount of engagement between the crypto industry.
I'm moving again to 117.36.
An enormous amount of work going in and really helping to.
And I probably will try to sell at the market price.
Many different types of roles that exist in this broader.
If broker will allow me. Please don't forget, we're professional traders. We trade with, we place order on level 2. So I want to remind you, if you already fill this order with profit, well done. If not, stay with me because market right now trying to reallocate its positions. I mean banks, hedge funds. So it takes time to reallocate, and I'm placing order and I'm waiting for buyer to buy my short position, and that's it. Position closed at 117.36. We have, as you can see,
in the ecosystem,
really good profit. Okay, we got over 800 pounds in profit. Great, well done, guys. We started to trade, as you can see, at 7:30 and right to the end. Okay, all of you guys who follow our trades, well done. I'll speak to you next week. I'm going on holiday. Stay safe. Try to practice your strategy if you got the strategy. If not, you can get the strategy from companyeye.co.uk. Okay? I'll speak to you later, guys.
The bigger issue is it's just not on the radar of anyone, and there's a lot of work to do to make sure that Washington better understands the importance of this economic infrastructure.
Well, and look